Everyone knows about moving averages, don't they? They're straightforward, user-friendly tools that assist in grasping the market's direction. But there's a serious problem with the classic versions, like the traditional EMA. They delay the signals too much. In other words, by the time the average finally shows a reversal, a large part of the move has already happened. For example, when the price breaks and closes below the EMA, it signals the start of a downtrend. However, if you wait until after the breakout to enter, you might find yourself only catching the tail end of that price movement, and the chart could then begin to ascend once more. And the same goes for an uptrend, just the other way around. This delay is what we call lag. It's a phenomenon that causes so many strategies based solely on moving averages to fail. Now, imagine a moving average that responds faster to the price, staying smooth but eliminating most of the delay. That is precisely what the zero lag EMA accomplishes. It was designed to cut down on the lag in classic moving averages, providing more precise and earlier signals. In practice, this means you can enter trades earlier, capture a larger portion of the move, and significantly improve the risk return of your trades. Just check out the difference. Here we have the zero lag moving average in white, and in pink the traditional exponential moving average was just added to the chart. Just look at the difference. Both averages are 20-period averages. However, observe how the white average was broken much earlier, and then the pink average was broken here on this specific candle at a later point in time. The disparity between one moving average and another can be quite substantial in certain scenarios, leading you to potentially enter a movement at its tail end, specifically when it breaches the traditional exponential moving average. So let's explore how we can effectively utilize this zero lag EMA to operate in the market and identify price movements much closer to their start. To use the indicator, we'll be on TradingView. I'm on the EUR/USD 15-minute chart. You can apply this to any chart, be it stocks, crypto, indices, or Forex, and you're free to choose any time frame you prefer, from 15 minutes, 30 minutes, 1 hour, 4 hours, essentially, whatever suits your trading style. First, you will go to the Indicators section and then you will search for Zero Lag EMA. It will be this very first option from Kivank. Simply click on it and it will be displayed on your chart. When you click the average, you can access its settings. Alright, let's go ahead and set up all the moving averages we'll be utilizing for our strategy. The first average, which is white, is our 20-period exponential zero lag. All you have to do is just click OK. We will once more search for the zero lag EMA and proceed to add 2 additional instances of it. This will result in a total of 3 exponential zero lag moving averages being displayed on our chart. They appear here in the corner so we can configure them. Therefore, we will configure those that have not yet been set up. For this one, we'll configure it to a 40-period zero lag EMA and set its color to red. For the bottom one, we'll access its settings and then configure it to be a 60-period line displayed in a light blue color. Afterwards, we can confirm by clicking OK. Thus, our white average acts as the 20-period zero lag exponential, our red average serves as the 40-period zero lag exponential, and the blue one functions as the 60-period, together clearly showing us the short-term market trends. When all 3 moving averages are perfectly aligned, the white line at the top, the red line in the middle, and the blue line at the bottom, this configuration indicates a short-term uptrend. Furthermore, when we observe the white moving average positioned at the bottom, followed by the pink in the middle and the blue at the very top, this configuration indicates a short-term downtrend, signifying a robust and pronounced trend in the market. Now let's look at how we would use this indicator to execute a buy. But before we proceed, many of you often ask me which brokerage I personally use to operate in the Forex market, stocks or cryptocurrencies, and the answer is EXNESS. To me, it's the market's best and most comprehensive brokerage. If you've been annoyed with your current brokerage, you'll understand what I'm about to tell you. Many brokerages delay order execution. EXNESS executes instantly. Some charge high spreads. At EXNESS, the spreads and fees are incredibly low, among the lowest you'll encounter in the market. Have you ever been stuck waiting days for a withdrawal? With EXNESS, your funds are deposited almost instantly. And best of all, you can adjust the leverage almost infinitely, as you wish, while controlling your risk. So if your brokerage freezes, overcharges, or is slow to pay you, it's time for a change. The link will be in the description below. And like I said, I consider it one of the best brokerages with the lowest fees on the market. We need to observe the market entering within the moving averages and making contact with the red line exactly as it demonstrated right here. At this point, we need to wait for a candle to close outside of the white line, specifically the 20-period moving average. This particular occurrence served as our trigger for action. It's important to remember that the price must not reach or touch the blue line, as doing so would invalidate the trade order. So in this movement here, it didn't touch and move back outside the 20-period average, signaling a possible continuation of the uptrend. We would position our entry precisely at the closing point of the candle that pierced through the average. Our stop loss would be set just beneath the blue line, specifically at a decrease of 0.06%, while our profit target would be twice that amount, aiming for a 0.12% return. The chart then came down to this point, hitting our target and giving us a successful take profit on this operation. And for a downtrend, it's the same thing but in reverse. We need the price to move within the moving averages. Touch the red moving average, but not make contact with the blue moving average. It came very close to the blue line here, but it did not touch it. Therefore, we will await the very first red candle that intersects beneath the white 20-period average. This particular red candle was the one we were looking for. Therefore, we could have initiated our trade precisely at its closing point right after it broke through the line. We'd position our stop loss slightly above the blue line at a 0.05% threshold and aim for a target that is 2 times lower, specifically at 0.10. And the price came down to hit it with this candle's wick, giving us another take profit, this time in a downtrend. And here is a tip: always try to utilize this strategy in trending markets. As you may already know, the cryptocurrency market is considerably more directional compared to the Forex market. So if you'd like to test this on the cryptocurrency market, it will function quite effectively there as well. And if this video here assisted you in any manner, do not forget to subscribe to the channel, activate notifications, leave a like, and comment "Trade in Practice" for me to bring a saga of trading with the indicators I present here for a week. I will select an indicator and actively trade with it this entire week using a live account, then I'll reveal the outcome after 7 days. If you want this, leave a comment saying "Trade in Practice" and remember to subscribe so you'll be among the first to know when I launch the series. It's simple, direct, and effective. The Zero Lag EMA unites the best of both worlds, the clarity of a classic moving average and the agility of an early reading. To apply this strategy to any asset or time frame, just test, adjust, and practice until you master the method. But remember, this isn't financial advice. This video is purely educational in nature. It does not constitute a buy or sell recommendation for assets. Always do your own analysis and consult professionals before investing if you lack confidence. Thank you, and I'll see you in the next video.